Good evening, ladies and gentlemen. We'll just give it 30 more seconds as we have attendees joining us. All right, let's get going. Good evening, ladies and gentlemen, and welcome to our seminar on COVID-19 and Strata insurance. Two very important topics that are impacting many homeowners' lives that live in Strata in BC. We've seen significant impact on the Strata insurance as well as COVID-19. So first, let me introduce myself. My name is Sean Ingram. I'm the Vice President of Community Development with First Service. First Service is the largest strata management company in North America and as well here in BC. We've got an excellent panel today, experts from across Canada that are going to be speaking on these important topics. Let me introduce them. The first is Paul Murcott. He's a Vice President of Strata Operations with BFL Canada, an insurance broker in BC and as well as across Canada. We've got Pat Chatino. He's a Senior Director of National Programs for First Service Financial Inc. He's joining us out of Toronto today. And then we have Galen Porter. She's the Director of Insurance for the Western region for First Service Residential. So those are our presenters. Let's go over some controls to start off the evening. So we've got this new web platform we're using. It's called GoToWebinar, and it's got some really fascinating features that we're going to be utilizing. First up, we're going to be recording this session, and then we're going to be sharing it with all those that attended. I think we've already got a significant amount of questions asking about how they get copies of this. We will be sharing it and we'll be emailing it in the coming week after this recording, along with some questions that we can't answer tonight. So already many of you have sent in questions. We've included those in the presentation today, but we also anticipate more questions coming up. So we're going to try to answer those. You can ask them in the chat feature, or you can email them to us. We probably aren't going to get to all the questions tonight. And so what we'll be doing is compiling those and theming them out and then answering them in the follow-up email that will also have a recording of tonight's presentation. Really fascinating feature we have is the poll questions. So a poll question is a live question that we're going to ask all of those that are attending today. And then our speakers are going to be able to answer them. And so look for that. It's going to pop up. It's a window. And then you'll select what your selection is, and then we'll see some live results. So a pretty fascinating feature for us tonight, and I'm really looking forward to it. So let's go over the agenda. The agenda tonight is we're going to talk about the overview and effect on the insurance market. So that's how we're being impacted in the insurance. We're going to talk about the insurance policies and coverage, so what the insurance covers and who it affects. The best practices for strata corporations are going to be our next one. Preventative maintenance tips for strata corporations, strata councils, and strata lot owners. We're going to look next at the COVID-19 challenges, so how it's impacting us and what we're doing and how we're addressing those challenges. And then we're going to have a question and answer period at the end, which we talked about, and we already are receiving a bunch of questions. So thank you, and we'll try to get to them as many as we can tonight. So first, we're going to do our trial run, our first time, and we've got a poll question. The question is, an insurance broker is the party that provides the financial protection to a strata in the event of a loss. So an insurance broker is the party that provides the financial protection to a strata in the event of a loss. So right now, you can go on your screen, you can click true or false. I'm going to give everybody another 15, 20 seconds to click on it. And then what we're going to do is we're going to see the poll results. And we're going to pass it over to Paul Murcott from BFL, who's going to address the poll question along with a good overview of the market right now. Okay, can we see the results from our poll question Whoa, way to go, 80 to 20. So we've got 80% of the respondents said false. An insurance broker is not the party that provides the financial protection. So with that, I'm going to turn it over to Paul Murcott. And Paul, maybe you can answer the question.
Thank you, Sean, and good evening, everyone. And I'm happy to say that 80% of you were correct. The right answer to that question was false. The insurance company is the entity that provides the financial protection in the event of a loss. I'm going to talk a little bit about that in my slides. So thanks again, Sean, and welcome attendees. It's my absolute pleasure to be here tonight with the First Service Residential. I'm going to speak to you a little bit tonight, a quick overview of my slides. So first up, I'm going to set the scene. I'm going to go over the difference in parties in a typical insurance transaction. Then I'm going to talk a bit about pre-COVID-19 and the fact that we're in a hard insurance market, and then what that insurance market is and the impact of that hard insurance market. And then we're going to finish up with post-COVID-19 and what has been the impact of the pandemic, specifically for Strata corporations. So before we get stuck into the insurance marketplace, it's important for us to understand the parties that are involved with a typical insurance transaction and what their respective roles are. So first up, we have the insured, or the Strata corporations, and in this case, it's all the registered owners of the Strata lot. So Strata pays premiums to the insurance companies to be provided with a financial protection against loss. Next up, we have the insurance companies, and they're the entity that provide the financial protection in the event of a loss. They provide multi-million dollars worth of protection for your corporations, but they also provide coverage for many different corporations. That's often in multi-billion dollars worth of assets. Insurance companies also set their own rates and deductibles. And then finally, at the end, we have insurance brokers here. Speaking as an insurance broker myself, we're independent from insurance companies. We work with Strata corporations, and we seek insurance on behalf of the Strata corporations. We work with multiple different insurance companies to find the best solutions and quotations in the marketplace. So pre-COVID-19 and a hard insurance market. So now we understand the difference in the parties in an insurance transaction. Let us look at what was happening in the insurance marketplace pre-COVID-19. So insurance companies make their income through two streams of revenue. Number one, through underwriting profit, and number two, from investment income. And insurance markets also run in cycles. We have hard and soft insurance cycles. In a hard market, underwriting profit, and that's the money that insurance companies make off insurance premiums, and investment income, which is money that they make off investments in stocks, bonds, mortgages, and real estate investments, are down. Conversely, in a soft insurance market, underwriting profit and investment income is up. In a soft insurance market, there are multiple insurance companies all competing for business, so premiums are typically low. At the end of 2018, we entered into a hard insurance market. What happened is we saw a reduction in the supply of insurance by about 30 to 40% to the residential sector. On top of that, there was an increase in demand. So the value of buildings increased between 7 and 9%. So if we were to do nothing at all, the insurable value for the insurance industry increased between 7 and 9%. But as well, there were more buildings being built and there were larger buildings being built. So pre-COVID-19, we were in a hard insurance market with reduced insurance companies and an increased demand. So what were the leading effects of that hard insurance market? And I'm sure many of you have felt these effects yourselves. So first up, we have increased premiums. So insurance companies have lost money in Strata insurance over the past few years. So we've seen increases anywhere between 20 up to 400% in some extreme cases. We have increased deductibles. So this has been another way for insurance companies to start to minimize their loss performance. And we saw this in a big way in 2019, 2020, the beginning of 2020, with many corporations going up to $100,000, some even higher. We saw strict underwriting guidelines. So before the hard market, insurance companies would need basic building information and loss histories. Now they require much more detailed underwriting submissions to include information on property upgrades and loss prevention. And then finally here, late insurance quotes. So this was a big one in 2019 and for the start of 2020. So insurance brokers have to go far and wide to replace that reduction in supply. So that process has seen substantial delays in quotes, in some occasions right before the day of expiry. So what type of properties have seen acute problems? So this is still pre-COVID-19, don't forget. So first up, we have properties that have been located in a high catastrophe zone. And in British Columbia, that's for earthquake and flood. We've seen insurance companies withdrew significant support in areas of the with a high catastrophe in the lower mainland. Then we have wood frame buildings. So these building types have seen significant fire losses, not only from large natural events such as the Fort McMurray wildfires, but also from large apartment fires. Then there's larger valued buildings. So the bigger the building becomes, the more insurance companies are required to share that risk. And as I've just stated, insurance companies have reduced. And then finally here, for properties with a poor loss record. So insurance companies are becoming much more selective in which properties they underwrite. And properties with a poor history of claims have seen a reduction in supply. So as a recap, we now know the difference between the parties that are involved in a typical insurance transaction. We know the difference between a hard and soft insurance market. We know that before COVID-19 hit, we were in the middle of a hard insurance market. So what did COVID-19 bring? Well, in the commercial sector, there's big concerns from policyholders around business interruption. But thankfully for Strata corporations, there's not too much additional to worry about than what was already happening in the marketplace. From a coverage perspective, coverage has to come from an insured peril, such as fire or water damage. And as there's no physical property damage, there is no coverage under a Strata policy for pandemics such as COVID-19. What we've seen insurance companies start to do over the last month is specifically exclude it from policy wordings by adding what we call a communicable disease endorsement or exclusion. And again, that doesn't really change the fact that there's no coverage under Strata policy as anyway. It's just so that the wording is clear. From an operational standpoint, let us look at those same three parties that we reviewed at the beginning of the slides to look at how COVID-19 has impacted their ability to operate in the middle of a pandemic. So first up, we have the insureds of the Strata corporations. So most of the ownership are working from home, navigating the challenges that brings with kids and dogs and other daily interruptions. Meetings are now being held virtually, so this could add additional time or technical challenges. The approval process could be delayed, and if an additional expense is required over budget, approval has to come from the ownership through an SGM or an AGM. And this all now has to be done virtually. So this could mean we start to see payment delays as Strata corporations start to navigate their way through this process. Next up, we have the insurers. So the same set of challenges working from home. We've seen further delays in getting the quotes from insurance companies. Now I've put Lloyd's up here because Lloyd's are an insurance company that are used to dealing, have many deals done face to face. But the same can be said for a lot of insurance companies now. We're seeing further delays in getting quotes. And then insurers, as I mentioned, have also started to add that communicable disease endorsement. And then finally here we have the brokers, and they're living the same set of challenges working from home, equipment challenges. We're used to dual screens in the office and all the luxuries that an office brings, whereas now we're at home working from a laptop often in the kitchen. So that brings its own set of challenges, and then just communication changes in general. Everyone's navigating the way through the way that they communicate. So in summary, we're still in a hard insurance market, and while COVID-19 has definitely slowed things down a little, the insurance industry is still working and functional for Strata corporations and still providing the protection that Stratas need. And from a coverage perspective, Strata policies will not likely be affected. So that ends my slides, and back over to you, Sean.
Thanks, Paul. So not the best news. We're in a hard market, and then we've got COVID on top of that, but things are still functioning. Okay, so we're going to go on to our next poll question, and we've had a couple hundred people join us since the last poll question, so I'm just going to go over the controls. What it is we have a poll question, and there it's popped up, And if everybody can click on what they think the answer is, we're going to show live results from it right now. So the question is, what is the most common type of loss in a condominium over the last 5 years? So do we think the most common is fire, water, theft, and mysterious disappearance? I might need a definition on mysterious disappearance, or wind. So what is the most common type of loss in a condominium over the last 5 years? And I think I know the answer, but I want to know if everyone else does. So we'll just give you 20 more seconds, or maybe 10 seconds for everybody to click there. Oh, looks like we've got a huge uptake. Okay. All right, let's close that poll. Let's see the answers here. Whoa, wow. So that's not even close. So 97% of you, so that's well over 600 people attending tonight, know that water damage is their best guess. So with that, I'm going to turn it over to our next speaker, Pat. And Pat, maybe you can address that question there.
Thank you, Sean, and good evening, everyone. And wow, I think I made that question too easy. That certainly was a question on frequency, not on severity, and you all hit the nail on the head. In the last 10 years, we certainly have seen an uptick in the number of water losses. We have been experiencing, usually they're burst pipes, leaky roofs, and even flooding. And although fire typically causes more damage, even though we see that, we're also seeing larger buildings, and as we go up and the building costs increase, we've seen water losses recently in the millions of dollars as well. So water certainly has caught up to fire in terms of total damage, but you guys hit the question right on the head. The water losses definitely occur much more often than any other type of loss. So let's kick off the slides. My name is Pat Scatino, and I'm the Senior Director of Insurance Programs with First Service Financial. I'm also a risk manager and licensed insurance broker in each of the provinces we operate in. My segment tonight discusses the types of insurance stratas, owners, and tenants need to buy, as well as the importance of having unit owner and tenant insurance. It's important to ensure that all aspects of risk are covered properly while living in a strata. Please, next slide, please. As many of you know, the strata and its common areas are insured under several policies to protect the corporation from first-party property damage and third-party liability. However, this does not protect the owners or tenants' personal belongings or their personal liability. The strata is required by the Strata Act to ensure all common property, common assets, buildings included in the strata plan, and fixtures in the strata lot. The common property must be insured to full replacement cost, so it's important that an appraisal is completed at least every year. Unit owners and tenants' property is excluded from the Strata Corporation's policies. The Strata's property insurance policy only covers property owned by the Strata Corporation and what's found in the Strata plan. Stratas also purchase general liability insurance to cover the strata for any third-party suits, as well as directors and officers insurance to protect the Strata Council while acting on behalf of the Strata Corporation. Now let's talk about the unit owner's policy. There are several important coverages built into the Strata unit owner's policy to protect them from a variety of exposures. Property insurance will cover your belongings, including belongings in storage lockers, as well as any upgrades you have completed in your unit that do not form part of the standard unit. Examples of this coverage would be replacing the contents in your kitchen should a fire occur, or even the loss of an expensive watch while going out for a jog. Included in the property section of the policy, you will also find important extensions of coverage. One such extension is additional living expenses. This type of coverage would provide any additional costs you would incur to live elsewhere should your unit be uninhabitable. An example would be a major fire destroying several units and your unit is declared unsafe. Costs for hotel, transportation, and any additional cost to live elsewhere would be covered. Another extension of property coverage is protection for loss of rental value. of your strata lot. This coverage would pay for the loss of rental income should your unit be damaged and uninhabitable. Since your tenant would be unable to live in the unit, they likely will not be able to pay their rent. This coverage pays their rent while the unit is being repaired and ends once the unit is able to be lived in once again. The most important extension of the unit owner's policy would be coverage for deductible assessments from the Strata Corporation. Per the Strata Act, the Strata Corporation can assess a deductible on its insurance policy back to the unit owner. For example, your dishwasher overflows and sends water down 8 stories, damaging several units along the way. The Strata policy would pick up the coverage to repair the walls and damage to the standard unit for each unit damaged. Now, I've seen these claims go into the hundreds of thousands of dollars, especially when elevator panels and expensive equipment is damaged. Water damage deductibles on many of the Strata policies are also much higher than what you would expect, typically $25,000 to $50,000, and I've seen as high as $500,000. Now imagine being assessed $500,000. Finally, the standard unit owner's policy includes coverage for your personal liability. This would cover personal suits against you for negligence or nuisance claims. An example would be a guest injuring themselves in your suite by tripping over a loose carpet. Should a suit be brought against you in court, this coverage would include defense costs as well as any judgments made against you. Tenants should also be purchasing insurance for themselves. Tenants' policies also include coverages for their personal property and general liability, as well as additional living expenses should the unit become uninhabitable. An important extension in the tenant's insurance policy is called tenant's legal liability. This protects tenants for the damage they may have caused to a rented unit. So for example, a tenant accidentally sets the kitchen on fire. Now the claim would involve both the unit owner and the Strata Corporation's insurance to repair the damage to the standard unit and to the upgrades. However, the negligence lies on the tenant for starting the fire. So this coverage would allow the Strata and unit owner's insurance to subrogate against the tenant's insurance, which would lower the impact the claim had on your insurance company. Not only that, but it also protects the tenant from financial collapse should they be sued in court. And finally, it's important to note the unit owner would be responsible to cover the Strata's deductible if it was assessed to them, not the tenant. However, tenant's legal liability would cover the tenant should the unit owner sue the tenant in court for the deductible reimbursement. And that's it for the insurance coverages. Back to you, Sean.
Thanks, Pat. I think you addressed a really important topic in that sometimes there's confusion over the difference between Strata corporations having insurance, personal liability and having that insurance, and then tenants' legal liability. So thanks for clearing those and separating those three. That really leads into our next poll question. And our next poll question, if we can get it, is there an existing legislation, and this is a tricky one, so you got to read it. Is there an existing legislation? I think that should be, is there existing legislation that requires both the Strata Corporation and owners to carry insurance? So you should have a box popped up right there. And if everybody can make their selection, yes or no, is there an existing legislation? Is there legislation out there that requires both the Strata Corporation and the owners to carry insurance? And just like Pat said, there's 3 different buckets of insurance. There's a Strata Corporation insurance, owner's insurance, and tenant's insurance. And it's important that any prudent person has those. But is there a legislation that says the Strata Corporation owners need to carry insurance? So we'll just give 10 more seconds here. Oh, we got good uptake here. You know what? We got great uptake. I think we can close that poll and let's see the results. Okay, so we got 70% saying no and 30% saying yes. And the answer is it's a bit of a tricky question. So with that, I'm going to turn it over to Galen, Galen Porter from our office. And Galen, maybe you can answer that question.
Thanks, Sean. Unfortunately, no, there is not. Although the Strata Property Act of British Columbia requires a strata corporation to obtain and maintain insurance coverage. Individual strata lot owners are not required by the Act to obtain their own individual insurance. Slide. Thanks for joining us tonight, everyone. My name is Galen. I work here in the Vancouver First Service Residential Office, and tonight I'm going to be speaking on some insurance best practices for strata corporations and their owners with respect to managing increased deductibles and premiums. And I'm also going to be providing certain tips on preventative maintenance. So owners, despite this inconsistency in the Act, please continue to, and in fact, renew your policy with increased vigor. Encourage every owner that owns in your strata corporation to obtain full and adequate personal home insurance coverage. Take this one step further by advocating to your local MLA and urge them to make it mandatory for strata lot owners to carry personal insurance. The fact is, with rising deductibles, many of the losses that are going to occur will be below the strata's applicable deductible and will not result in a strata corporation insurance claim. This increases the likelihood of final repairs for such incidents to fall on each individual and affected owner to deal with, regardless of whether the loss originated from strata common property or by an individual unit that is deemed responsible. Even if a water loss exceeds the strata's applicable insurance deductible, the strata corporation's insurance will not cover personal contents or betterment improvements made to the unit should they be damaged. Owners will not also automatically be covered for loss of use or out-of-home expenses in the event of a strata insurance claim. As Pat mentioned, it is imperative to have this coverage. The average water sewer deductible on a strata's policy is now approximately $50,000 to $75,000, with many buildings exceeding $100,000 and higher. Not having a personal policy could result in significant financial hardship for an owner facing a chargeback. It is very important to confirm with your personal broker that you have enough chargeback coverage should your unit be deemed responsible for a loss and you are charged back the cost related to the incident, which can be up to the maximum amount of the applicable deductible on the strata's policy. We have seen many changes in the insurance industry in recent months. Paul spoke about how this is affecting the strata's coverage. Owners have also been greatly impacted. Until recently, chargeback coverage had a typical maximum limit of approximately $50,000 to $100,000, and there was definitely incidences in which the owner could not purchase an adequate amount of chargeback coverage. However, a new product has been recently introduced, enabling owners to purchase a secondary excess loss assessment policy. This new product will help owners obtain a top-up up to $250,000 in chargeback coverage. So for example, if your strata's water deductible is $200,000 and the chargeback coverage under your primary unit owner's policy is $100,000, you have a potential gap of $100,000 that you could be responsible for in the event of a loss. The secondary excess policy provides the opportunity to purchase the difference. This excess option is now available through many brokers such as BFL Canada, CMW Capri, Westland, BCAA, etc. Slide. With the rising cost of strata insurance premiums and water loss deductibles of $100,000 and beyond becoming the norm instead of the exception, a set of current legally vetted bylaws will ensure good and fair governance within your strata community and contribute to the financial health of the overall corporation. Bylaws that speak to the strata's ability to charge back responsible owners for costs that result in a strata's insurance claim, as well as the costs that fall below the applicable strata deductible and do not result in a strata insurance claim, are and will continue to be imperative. Stratas need to have the ability to collect recoverable costs from responsible owners quickly and effectively. a good set of bylaws that are tailored to the unique characteristics of your Strata Corporation and that also consider the impact and trend of recent civil resolution tribunal decisions will help do exactly that. Essentially, an effective chargeback bylaw will transfer risk away from the Strata Corporation and onto the owner's personal insurance company. Another reason that all owners should have a personal policy with adequate coverage in place. In some instances, if the Strata's property deductibles exceed what is available to owners in the market, so right now that's about $250,000, bylaw adjustment limiting homeowner responsibility might also be recommended. Slide. So moving on to some best practices for managing increased premiums. During the Strata's insurance renewal, there are certain risk factors insurers look to that are beyond the control of the Strata Corporation. So such as insured value, construction type, or the location. However, there are other risk factors insurers look at that a community can influence during the renewal process, such as ensuring the Strata Corporation has had regular building updates, which can help reduce claims from occurring and or mitigate the damage incurred. More than ever before, it is important to work together as a community to prevent and mitigate loss. For example, as an owner, do you know where your water shutoff is? We also see so many claims that could have been prevented, namely flushing non-flushables such as the wipes and gloves that everyone is using right now, flushing cat litter, or hanging clothes off sprinkler heads. Slide. At the Strata's insurance renewal, the insurers will look at the 5-year loss history and determine the loss history ratio, which is calculated by premium paid by the Strata Corporation versus claims paid out by the insurers. Stratas with a positive loss history will receive far more favorable terms, which will inevitably lessen the impact to Strata fees paid by owners over time. Slide. The next 2 slides, I'm going to provide some tips on preventative maintenance for both Strata Corporation and its owners. Here are a few suggestions for Strata corporations. Councils, start an initiative to teach residents the location of shutoffs within their homes. Buildings with hot water supply plants in the rooftop should confirm that their floor of the mechanical room is sealed. In advance to winter, schedule to drain your outside hose bib. Ensure regular cleaning of the horizontal and vertical sewage lines. Perform regular inspections of exposed water pipes. Slide. Owners, upgrade to steel braided hoses on water supply lines to washers, dishwashers, fridges, and toilets. Replace these hoses every 5 years. Install mitigation devices. Installation of water alarms devices by dishwasher, fridge, washer, and behind the toilet. Also, while this might not apply to all buildings, also install water alarm devices by the hot water tank and heat pump. Owners, if you're going away, shut off the water supply when the unit is vacant. Do not run the dishwasher or your washer and dryer when you leave or when you go to bed. If your hot water tank is over 10 years old, please replace it. Again, do not flush the unflushable items and perform annual maintenance on your plumbing. Slide. Many of the tips we just discussed, along with others, are included in a new resource that First Service Residential BC recently published titled Checklist of Water Damage Mitigation. We recognize that as an owner, it is sometimes hard to know where to start or what to do. As a side note, mitigating loss damage will obviously have a positive impact on the Strata's renewal. However, when filling out an application for a personal insurance policy, you may be asked about your individual unit's claims history. This is especially true if you're attempting to apply for the excess policy that I was referring to earlier. As a community, be proactive and move forward with planned and preventative maintenance. Explore the possibility of obtaining a depreciation report if the Strata Corporation does not have one and you are no longer under warranty. Depreciation reports can help your Strata begin to more realistically and accurately plan and save for the inevitable capital projects and replacements. As a community, pick and agree to a funding model. Going forward from today and year over year, agree to properly fund your annual operating budget so that both necessary maintenance and preventative maintenance can be undertaken regularly and adequately. Lastly, with all the layoffs that we've been seeing lately and the overall impact of COVID-19, some owners are wondering if they can stop paying strata fees for a period of time. The answer is if they need to continue paying strata fees, and the answer is yes. Strata fees pay for the operating expenses, including utilities and services. Most strata corporations have already really scrutinized expenses to keep the strata fees low and don't have the financial flexibility to defer strata fees for owners for any length of time. Thank you, and I'm going to pass this back over to Sean, who's going to discuss some additional challenges pertaining to COVID-19.
Thank you, Galen. So there's a lot of content there, and just to remind everybody, we will be sending a copy of this video out to with a follow-up email along with theming or answers to questions that have been submitted. And I see a lot on the strata fees deferral, so maybe we can definitely talk about that a little more when we get to the question and answer period a little farther along. So if we continue on, we're just going to touch on COVID-19 and how this adds challenges to what homeowners and what strata corporations are facing. And so if I can just get the next slide, there's really three buckets and three areas that are mainly addressed. And I'm going to speak to those myself. So the first one is the BC government has declared a state of emergency, which is totally understandable. And I think in general, we think we're doing the right thing. And one of those things is that there's no large gatherings. So personal gatherings would include annual general meetings or special general meetings. So as Paul outlined, we're in a hardened market, and Galen was talking about as well. And what that's resulted in is significant increases in fees and premiums for insurance. So the strata corporations need to pay for that. And you can't have a general meeting in person right now. So how do you raise the funds to pay for the insurance premiums? So one of the items the government's also done is, regardless if you have a bylaw, you're allowed having a pure electronic meeting. The challenge is how to hold a legal and binding general meeting electronically for strata corporations that are larger. So those probably 20 homes or less, when you're going to have 20 people attending, you could probably do that over electronic means fairly easily. You would sign everybody in, and you could do that in person over the online. Now, once you start getting bigger and bigger, and you have more and more people attend, there's a significant challenge to holding those annual general meetings or special general meetings. So we've come up with a excellent solution, and we teamed up with a group of lawyers. This week we'll be releasing a best practice for holding a meeting where it is a restricted proxy. And so the intention is that you have a virtual meeting similar to what we have tonight, but with more question and answer period. And it gives the owners and council an opportunity to discuss the items that they're going to be addressing. And it's not a legally binding meeting, but it's an open conversation. It's a town hall. And so just like you would go through a normal meeting, you'd be able to have people stand for council and introduce themselves. You'd be able to explain or answer questions on resolutions, such as insurance, and maybe you have a deficit recovery, or you need to improve a new budget that has an increase for the insurance line item. And you would have that virtual town hall. And then after the town hall, you would fill out a restricted proxy. And what's different about a restricted proxy is the proxy holder, there's no interpretation. You're saying I vote yes or no, and that's what the proxy holder does. A normal proxy gives flexibility to the proxy holder. But in this case, it's a restricted proxy. And then all the homeowners after the virtual town hall submit their proxy, and we've got a process set up for that. And then there is a physical meeting, but in best case, it would be the proxy holder and maybe 1 or 2 council members of the current council. And then they would just go through the meeting and execute the meeting, the physical meeting, as directed by the proxies. And so it's the best case scenario now for having owners informed and having to be able to express their opinions, and at the same time having a legally binding meeting. So that is going to be rolled out to all First Service councils this week, outlining the process. And we're excited about getting annual general meetings and special general meetings moving forward. Another thing the government has done to allow paying for these increased insurance premiums is to clarify Section 98.3 of the Act, which is really about unapproved expenditures. And 98.3 says the expenditure may be made out of the operating fund or the CRF, the Contingency Reserve Fund, if there are reasonable grounds to believe that an immediate expenditure is necessary to ensure the safety or prevent significant loss or damage, whether physical or otherwise. And historically, there hasn't been clear definition on that. So there was some definition, and so it makes it a little easier for some stratas. Now, in some situations, the Strata Council probably wants to get some legal input just before they use 98.3, but at least the government's assisted us in clarifying that as well. One of the other challenges is with maintenance. So how do you do maintenance, especially in-suite maintenance that strata corporations do? And the answer is you don't. So if it's something like in-suite fire inspections, most cities have relaxed the requirement for in-suite fire inspection. Obviously, if the system is broken or something, that needs to be addressed, but going into units has been, the requirements being relaxed. Dryer duct cleaning, you can possibly do it from the outside, but not the inside. And so we do understand that there's a balance between doing some of the maintenance, especially some of the items Galen said, because we want to get the loss history down. We want the strata corporations to have less losses, because then you're more attractive to the insurers that provide the insurance. So already properties managed by First Service, so you all on this webinar, the buildings that we manage have a lower loss ratio in BC, which means there's less claims, and if there is claims, they're less severe than the industry average. So that's a good thing. Already the group of buildings is more attractive to the insurance providers, making it easier for the brokers in this very challenging time to get some more coverage. And that is one of the key items, is just getting coverage right now. And so those are some of the specific challenges with it. We're going to continue on and we're going to answer some questions, and we have a bunch of questions that are submitted. I don't think we're going to get to all of them today, but I'm just going to pull up a couple of them here. And I think the first one is, and I would say the most popular question is about deferral of strata fees. And so if it's okay with the rest of the group, I'll also address this one. Really comes down to is the strata corporation needs the strata fees to keep the building running, keep the lights on, keep the elevators working and whatnot. And they don't budget to have flexibility in the budget usually. Also, the Strata Council doesn't have that power to defer strata fees. There's nothing in the Strata Property Act that says, yes, the council can defer strata fees. We do think it's prudent, though, that the Strata Council, on a case-by-case basis, look at situations where people are facing personal, especially financial challenges, and try to accommodate a payment plan, or maybe relax the fines, or if there's some interest earned or something, to look at those things. So maybe if the homeowner is paying as much as they can, the Strata Council won't levy fines for a month or two or longer, whatever the agreement is. So we do think that's a prudent thing for Strata Council to do, but deferring strata fees overall, unfortunately, is not a great solution. Okay, so I'm going to pull up a couple extra questions that we've got coming in here, and maybe I'll move it over to some of the speakers. So one question is, how can I get a copy of the water damage mitigation, oh yes, the checklist that was referenced by Galen. So Galen, how can we get a copy of that?
Okay, thanks, Sean. Two answers to that. One, we published that resource in early February, and since then it has been going out with council meeting agendas. However, after this webinar tonight, we are going to be creating a web link for this resource, and we're going to send this link along with the link to the webinar in our follow-up email.
Okay, great. Another question here is, and I'm just reading it, you spoke about owners being responsible for arranging their own repairs if it's less than the Strata's deductible. Oh yeah, very good question. Do I need to pay for my in-suite repairs if it's not my fault? Oh, very good question. Actually, Galen, you're probably the best to answer that. Do you want to address that one?
Sure. I mean, we could do an entire webinar just on the duty to repair, but we could. But in a nutshell, the duty to repair is found in the Strata Corporation's bylaws, and it generally states that the Strata Corporation must repair and maintain common property and assets. However, owners must repair and maintain the owner's strata lot. So if there was a loss that was below deductible, it would fall onto that owner to repair their strata lot. However, if it was above the strata's insurance deductible, as all owners are named insured on the strata's policy, the insurance would be triggered to kick in. However, the responsible owner for the loss would likely be charged back the amount of the deductible.
And that would be pending. That'd be pending bylaw, right?
Exactly. It's all pending bylaws. So both the duty to repair and also whether or not the building has a proper insurance chargeback bylaw in place. So going back to what I was mentioning in my presentation about, it's really important to review your bylaws and make sure that you have a proper insurance chargeback bylaw in place. And oftentimes, I mean, we recommend that a lawyer look at this because there'll be sections of your bylaw, like, so for example, your insurance chargeback bylaw, that kind of ties into other parts of bylaws as well, like the use of property. So we really need to make sure that all the language is consistent there. So for example, some of the outdated language might refer to negligence rather than responsible. So it's really important to, have a lawyer look over your bylaws and make sure that that you have the proper one going forward for insurance.
Okay, there's actually a follow-up question to that, but maybe I'll put it over to Paul. Paul, can you explain what a named insured is? A named insured?
Yeah, so a named insured under the policy, Sean. So it's when we're talking about strata corporations, a named insured is every single one of the owners. So it's the named of all registered owners of the strata lots in a strata corporation. So if you own a strata lot in a strata corporation, then you are named insured under the policy. And a named insured under the policy has the rights to claim on an insurance policy and has all the rights to claim on any insurance policy.
Okay, thanks for that, Paul. And there's another one here. Maybe this is actually probably my favorite question of the day. And Paul, maybe you can address this one as well. And this is, when is this insurance going to be over? When is the hard market? And you talked about the soft market. When are we going to get the soft market? When's the hard market over?
Yeah, thanks, Sean. Let me just grab my crystal ball. Unfortunately, it's a little foggy, but there are a few things that we do know, and I've been speaking to pretty much every single insurance company that there is in Canada recently, and as I mentioned in my slides, we know that insurance companies need to start making an underwriting profit again. And I also know that hard insurance markets, they typically last anywhere between 12 and 24 months. So, as soon as we start to see those underwriting profits hitting the insurance companies' books, and, we start to see that making an impact, then we'll start to see insurance start to ease here in Canada. Now, with this all said, and having seen the increases that we've seen over the past, 12 months, I'm predicting around, hopefully by the end of this year, entering into 2021, we'll start to see some relief to that market. But again, it's a crystal ball. It's a little foggy, but that's my best guess today.
Wow, I think that's the first time I actually want insurance companies to make money.
I know, right?
Okay, next question here is maybe Pat will share the love here. The question is, how many unit owners have insurance for their units? So how many, and I think they mean, yeah, owners, not tenants. Do you know, Pat?
Yeah, that's a great question, and it's not mandated anywhere in the Act. And fortunately, there are quite a few unit owners that do insure their properties, and that's great. However, we have seen cases where there are numbers of unit owners that don't, and that's because the coverage is optional. However, it's not an expensive coverage, and as I had discussed in my slides, it is a very important coverage because there are several coverages under there that protect the unit owner, such as the additional living expenses and such as the assessment coverage. But what I've seen is when a claim happens, it typically happens to the unit owner that doesn't have the insurance, and you know, for that $200 or $400 annually to cover that risk, it really makes sense to be sure that you do purchase unit owners insurance. And if there are any owners out there right now that don't have unit owners insurance, I would suggest pick up the phone as soon as possible, call your insurance broker, get a quote, because we have seen, especially water claims, happen a lot more often, and having that protection and that coverage really gives peace of mind. So that's my suggestion to all unit owners that don't have insurance currently.
Okay, thanks, Pat. So one of the next questions is, what should my strata be doing with COVID-19? So I think I'm probably the best one to field that one. So really a strata corporation that is worried about having COVID-19 or having people in the building with it, which everybody should be worried about. I think one of the key items that the government has outlined is that a lot of people can have COVID-19 and they're infectious and they don't know it and no one knows it. And so really, I think the rule of thumb is you should treat everybody like they have it and make sure you're practicing social distancing. From a strata council, strata corporation point of view, amenities should be closed unless there's very specific amenities where people can use it themselves and it's self-cleaning or something. But in most general situation, amenities should be closed. There should be a cleaning regimen, especially for high touch areas like the elevators. We've seen a lot of strata corporations that have repurposed. So if they have a janitorial or cleaning company, or they have their own cleaners, or we provide the cleaning, instead of focusing on those amenities that are now closed, we can focus on cleaning the elevator more frequently and dealing with that. One of the challenges with COVID-19 is there is a privacy legislation, which is, you know, if someone doesn't wish to disclose, they don't have to disclose. And so really, if you're ill at home and you're not even sure you have it or not, are you going to tell the Strata Council? I don't even know if there's a duty to do that. So I think it's important that Strata corporations are cleaning on a regular basis. Also providing literature such as notice. You know, if you have 10 people in an elevator cab, that's too many. And so spacing out in the elevators is probably a good idea, and just doing your best and using common sense there. So I'm going to go to the next question here. So this is, I wonder who's going to be best for this one. Galen, maybe you want to talk about it. What is the cleaning of the horizontal and vertical pipes? Can you just expand on and explain that a little more in detail? I think we went over that quickly. Galen, you there?
Sorry, I'm here.
All right. So the question was, what are the horizontal vertical pipes? And I am assuming that's strata you're talking about there.
Yes, it'll be in the water damage checklist that we're going to be sending out to every person on this call. Yeah, and it'll be very broken down by section, and what, you know, giving guidance on not just that tip but other tips as well.
Yeah, great. I think one of the key things is knowing where the water shutoff is too. And every
Yeah.
homeowner, if you, I have this memory I was in my home and water started coming through the ceiling, and I went upstairs and the person had no idea where their water shutoff is. So I remember rifling through their shoe closet for them to find the shutoff so it would stop damaging my home. So hopefully everyone can learn where their water shutoff is. Okay, so yeah, sorry, Galen.
I was just going to say, I totally agree. I think that's so important. I think there's a lot of claims, even if they say they're going to happen. Really knowing where your shutoff is can really prevent the extent of damage that's going to occur following.
Okay, great, thanks. So is there any final words from our speakers? I'm going to get a little more to touch on at the end, but is any of the speakers have any final words?
Just going back to what Pat was saying, you know, to pick up the phone and get a policy if you don't have a unit owner policy. But I was also touching about in my section to, you know, getting that policy is the first step, but really making sure that you have that chargeback coverage to the highest property deductible in the Strata's policy. It really depends on the provider that you go to, but you really want to make sure the wordings of that owner policy stipulate that, you know, if you're responsible for a loss, that insurance coverage will trigger up to the amount of the deductible. Where sometimes with wordings, it's more if there's a general assessment to each unit owner. So for an example of that would be like, let's say a flood occurred, like a natural weather event, and the Strata had to pay the flood deductible, they would, you know, charge back each owner their portion. So sometimes individual policy wordings might not cover both scenarios. So you just want to be really sure that it includes that chargeback coverage for both scenarios.
Okay, thanks, Galen. So we're going to take some more questions that we've got, and we're going to compile them. And again, we'll email them out. I do want to say that historically, over the last 5 years or so, we've focused on education events just for council members, and we've had great attendance, and they've been well received. But this is our first time addressing homeowners and opening up the invite, and really that was allowed. We were able to do that through webinar and webinar software. So we are going to try to focus on more educational events for all homeowners like this one. And sometimes it's a little high level and maybe a little more than most homeowners know, but I think it's great general knowledge. So we'll look to doing more of these in the future. Now, if you have an idea, if you have, you know, I'd love to learn about XYZ, please submit it. That's going to be one of the questions we send out in a survey to all the people that attended, and we'd be interested in learning about something that's important to you that we can address in a webinar or help people learn more about. So we're really open to ideas. So with that, I'm going to say thank you very much for service. Really appreciate your attention and your time here tonight. And we know these are two very serious topics affecting many people. And I really want to thank our speakers. Thank you, Galen and Pat and Paul. We really appreciate your time this evening. And I think a lot of people, and myself included, learned a lot. So thank you very much. And
Thanks, everybody.
Thank you, viewers.
Thank you.
Have a wonderful night.
Great night.
Good night.
Good night.
Good night.